Bitcoin has been consolidating in a horizontal channel for over 4 weeks. One of my favorite sayings in trading is when in doubt, zoom out. And in today's video, that is exactly what we're going to be doing, taking a look at the broader market, the higher time frame, and of course, wrapping it back around to the short-term charts. By the end of today's video, you'll know not only exactly what you should be doing, what is more likely, but of course, exactly what the charts are telling you. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be going over the Bitcoin's price action in relation to the short-term price action and the macro charts. Discussing it from a technical and structural perspective, talking about the current price action and of course, the most likely future scenarios. Before we do get into it, smash that like button, hit the comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link in the description down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and with the relevant economic data. If you are interested in joining our trading channel, we have our VIP group. We post trading signals of exact entries, exact targets, exact stop losses. You'll get access to our entire VIP group here, including access to a multitude of different group chats. The general chat, the trading chart and education chat, the trade setup chat, the video, news, and help chat. Again, our VIP group is so much more than just trading signals, although that was a big part of it. We focus on educating and providing you guys the tools to become better traders. If you're interested in joining that with over 650 active VIP members, you can go ahead and contact me in the pinned comment of the free channel to find out all of the information, our trading track record, and of course, exactly what you'll need to get access to. Let's go ahead, guys, and jump into the video, starting on the market data. So how are we currently looking for today? Volume is down 18.62%. You can see it on the top left-hand corner of the monitor over here. On the right-hand side, we can see liquidations are down 1.76%, sitting at 48 million. And like I said, volume was sitting at 34 billion. Looking at our September month-on-month returns, we're currently up 2.08% for September. However, if we do take a look at the price action, we haven't really made a significant directional move from our support let. If we look at the high time frame, we came down, we retested this high time frame major bullish support. Again, a bullish reaction from here was kind of expected, as this is a major area of liquidity. We have seen a bounce. However, that bounce really hasn't developed into anything on the high time frame that has shifted the overall trend on the weekly. The weekly trend is still bearish whilst we remain underneath this downtrending diagonal resistance, right? This downtrending diagonal resistance is what represents the overall trend of the price action on the high time frame right now. We are in this downtrend, and therefore the downtrend is still active. What we are seeing, however, on the smaller time frame is a horizontal consolidation. It's horizontal consolidation. We're going to dive into a lot more detail in just a moment but it is something we need to be watching over the next couple days. So moving from our data into our volatility, we can see on the 30 and 60-day volatility index, we saw a little bit of a spike upwards during that volatility, or that volatile period when we had the news events coming out, particularly Grayscale winning a lawsuit against the FCC, resulted in a pretty large liquidation toward the top side. We saw this massive liquidity grab represented by this red box, this huge deviation through this channel up into that 28K range, and then we crashed all the way back down. So we did see a bit of volatility coming to the market. However, over the last couple days, last couple weeks, the volatility has been drying up, and we have now seen the volatility index on the 30-day start to correct it back downwards. On the 60-day period, the volatility index is still sideways, still plateauing downwards again, representative of decreasing volatility, representative of lowering volume, and just not really all that much strength in the market as of right now. Moving over to liquidations, we can see of the 48 million in liquidations, 41 million of those actually came from longs. And this is actually very surprising, considering the price action hasn't really done all that much in the last 24 hours. If we look at the last 24 hours, the last daily candle, we didn't actually see all that match happen, right? We saw a 0.78% move top and downside from opening price. We saw a 0.6% move, yet we saw 41 million in liquidations in comparison to shorts being liquidated at 6 million. What does that really tell us about this price action? It tells us right now, at this current range, underneath this level of resistance, there are a whole heap of people bidding into longs, aggressively jumping into longs at resistance. Now, we'll talk about this later in the video, but this is something you should be paying attention to, as the long to short ratios actually do matter when it comes to trading futures and the direction of the markets. So moving on from there, let's go ahead and get into the DXY. The DXY is kind of like the saving grace of Bitcoin right now. The saving grace, it's like the light at the end of the tunnel. It is providing a little bit of opportunity and a little bit of hope for the bulls to kind of spin the market around, as the DXY is in a key level of resistance. And as we approach and enter resistance, the probabilities of rejection start to increase, right? If you think about anything, the further we continue in one direction, the greater the probability becomes that a rejection and continuation in the opposite direction starts to increase. So as we approach this high time frame of resistance, we are now testing at 105 to 106 level. As you can see over here, we do start to become, a little bit more probable for this rejection toward the downside. I'm not saying this is going to happen. We are still in this overall uptrend, as you can see by this rising channel formation. But again, if we do see a breakdown of this rising channel uptrending support, which is this lower uptrending diagonal line, if we do lose that level, that could confirm the rejection from 105 and result in a short-term correction back to this lower area of support. Now, the rising channel itself is not a very thick rising channel, meaning the distance between the two parallel lines is actually quite small. The distance between the parallel lines actually form the basis of the measured move. You can see a measured move will take us down to around about 103, maybe even 103.5 if we had broken from this uptrending support. That would not really be enough to result in a full downtrend continuation. As for a full downtrend continuation, we're going to have to break below this area of confluence around 101. If we drop below this level, it becomes very, very bearish. That would be incredibly bullish for risk assets. If we break above this level, this becomes very, very bullish for the dollar and very bearish for risk assets. So watch out for what's happening here. Again, while we are sitting at resistance is very, very important, but we do have to keep in mind, we do have FOMC coming out very soon, and FOMC is going to be the Federal Reserve interest rate decision that is going to be held on the 21st, which is in 3 days time. If we take a look at the data, it does say there's a 99% chance we are going to see no change. So a 99% chance, the probabilities are telling us there's going to be an interest rate pause. Now, an interest rate pause is bullish considering inflation is rising. Remember, inflation is not bearish for asset prices. The only reason why the market will potentially react negatively to rising inflation is if there's a connotation attached to that rising inflation that interest rates in a future period is going to rise. What we are seeing here right now, according to the data, is inflation is rising again. However, there is no probability or very low probability interest rates are going to follow, and that could actually result in a bullish reaction in the market if we do see a pause come through. So if we do see a pause, we could potentially see a pump in the market. That is something to be looking out for. So over the next few days, be very much aware we are moving into FOMC. The probabilities for a hike are very, very low. Inflation is rising. We have this bullish narrative starting to develop. Whether or not that bullish narrative will actually come to fruition, whether or not it will develop over a higher time frame, considering everything else in the economy, is unlikely, but it could result in a rally for the markets if we see it play out exactly how the data would suggest. So I'm not saying it's going to happen, but I'm saying it's something you should be keeping in the back of your mind. And what does that mean for your decision making? What does that mean for your trading moving over the next few days? It means you should be more cautious. You should be more aware that the manipulation could come into effect. You can be more aware that the market could react in an unexpected manner. And you should be more aware that moving into these economic news events, these high impact news events, you as a retail investor basically have the last say, right? You have that last decision, and everyone else, these big market makers, the banks, the hedge funds, they get this information before you, they are trading it before you, they can position themselves before you. You end up just becoming liquidity 90% of the time. There's almost no point even trying to trade this stuff. Wait for it to pass, wait for direction to become clear, and then jump into the market. So let's go ahead, guys, and jump into now Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So Bitcoin has been consolidating sideways for a very, very long time. In fact, the market has been quite wild. I don't think I've seen a sideways consolidation like this for a long time. The last sideways consolidation we saw like this was actually a few months ago, right? But it was a little bit more volatile and choppy than the consolidation we have right now. If we actually zoom out, we can see a few different scenarios just in the last few months of consolidations pretty much equal to what we are seeing now, right? We saw all the way back over here. This was in July, June-July 2023. We saw a pretty similar sideways consolidation. We saw a sideways consolidation develop at around 32,000. We saw the deviation above, we shorted the deviation, we came back below, we actually created a new sideways consolidation just below that. We lost that, we continued down, and now we've created a new horizontal consolidation over here. Horizontal consolidation after horizontal consolidation after horizontal consolidation. What does a horizontal consolidation actually mean? A horizontal consolidation means there is indecision in the market. The price will only move sideways when there is equal sellers and buyers and there is indecision overall. So it's actually representative of indecision. The probability for a directional move is equal. There is about a 50% chance for a break up as there is for a breakdown from a structural perspective. Now we can go ahead and manipulate those percentages based on our technical analysis and actually give a better well-informed decision on where it's going to go. But from a structural perspective and an objective structural perspective, there's quite an even chance of a directional break either way. Now we are moving into FOMC. We do know FOMC is a market mover and therefore FOMC can have a drastic impact on where the direction of the price actually goes. This could be acting as a trigger out of this range. But we're going to ignore that for today. We're going to be taking a look at the chart for what it is. So we look at the chart right now, we can say, whilst we remain within this horizontal consolidation, and yes, the horizontal consolidation has been getting slightly wider. I mean, it's getting more depth as the price pushes up and consolidates. We build up depth in the order books around these levels, and these resistances get pushed up a little bit. The spread of this channel becomes a little bit larger. So we are looking at this consolidation right now, and we are saying while we remain within this consolidation, we are in this neutral territory, meaning you shouldn't be taking massive position sizes. You should manage your risk. You should be more aggressive with your take profiting. You should be more aggressive with neutralizing your risk down to zero when you're in trades by moving your stop losses or taking profits. You should be treating this situation as what it is. It is indecisive, and therefore you shouldn't have decisiveness or absolution in your decision making. You should be a little bit more open-minded, and therefore when you are more open-minded, you are aware that your edge is actually lower, and therefore you're adjusting your risk accordingly. When we're looking at the price action from a structural perspective, we can say we've had a liquidation above, okay? We've had deviation below. If we see a break, we expect that break to be a legitimate break until proven otherwise, provided the momentum and the volume is in accordance or in suggestiveness that that break will be sustained. So looking at the breakouts over here, if we're looking for a breakout upwards, we are still looking for a trigger point over 26,800. If we're looking for a break downwards, we are still looking for a break below 25,550, okay? Those are the two main triggers. If we're looking at the short-term price action, okay, we're looking at the current price action. We are saying, well, we're closer to the resistance here. We're further away from the support. The risk return is in favor of shorts, provided this range is a neutral range, right? There's an equal probability of a break up to down, okay? And therefore, as we approach this level of resistance, the probability, or should I say, the risk return is in favor of shorts. And therefore, if you're looking at trading, you should be looking slightly more to hedging to the short side, to the long side. As if we do break that trigger point, it'd be very, very obvious to be taking longs. And that is when you can go ahead and jump into your lower risk with more certainty longs. If we're looking at the CVD and of course the momentum on the smaller time frame, we'll go ahead and jump down to the hourly chart. So how is the price currently looking, right? We're seeing this move upwards, this strong move upwards to resistance, okay? We had bearish divergences print over here. We saw a correction down, perfect, okay? We retested that 26.3K level of support. Remember, 26.3 was the prior trigger. So we came back down, we retested that level as support. We're currently holding above that trigger point, and we have printed a second bearish divergence right over here. That second bearish divergence has resulted in a small continuation downwards, and we are more or less now consolidating sideways at this level of support, or just above this level of support at 26.3 thousand, which will go ahead and pop back into the chart really quickly over here. So 26.3 is going to be acting as a bearish trigger point. So we do want to see a confirmed continuation lower. We do have to see a loss of 26.3, which is going to be this local low range and this area of consolidation all the way back in the 8th of September. So a loss of that level will result in a continuation downwards. Currently, if we take a look at the momentum and the CVD, which is volume, we do see it is overall decreasing. However, this could be representative of bullish consolidation. We'll have to dive down to an even smaller time frame. So on a smaller time frame, we can see there is not too much happening here from a structural perspective. We are very much still in this overall chop zone. We don't have any wedges developing. We don't have any diagonal lines developing. We don't have any channels developing. We're very much choppy. If we take a look at liquidation data again, the liquidation data isn't really reflective of choppiness. It's reflective that people are taking aggressive positions at this level of resistance. So what I want to really drill into everyone's head right now is, while we remain at these points of resistance, the probabilities of rejections increase. Resistance is resistance until it is not. Sometimes when you're trading, sometimes in trading, there is no clarity. Sometimes there is no clarity. And the only thing you can do is create a set of mechanical rules which you follow at these particular times, and over a period of time, you hope that mechanical rule will provide an edge in the market. Sometimes there really is no clarity. There's not much more to say other than when we're at these points of indecision, when we're at these points of resistance, regardless of what is happening, you have to start following these mechanical rules. And for me, my mechanical rule is, when there is indecision, I drop my trading volume. When there is indecision, manipulation, and a lack of clarity, I reduce my trading capital. Okay, I manage my risk. I take my profit sooner. I also say, when we're in these horizontal ranges, I treat resistance as a resistance until proven otherwise, and therefore I'm looking for rejections at this point of resistance, like we did over here, okay, like we did over here, like we did over here. I'm not trying to front run a massive swing trade down. I'm not trying to front run a massive swing trade up for Bitcoin. I'm more or less letting the price develop and allowing myself to follow through with what is happening on the charts, rather than trying to front run everything, particularly when there is so much chop that going on. It's almost impossible to go ahead and front run anything with any degree of certainty. So my best advice right now is be patient, be aware what is happening, wait for the high time frame triggers. Okay, the triggers are likely to go off when we have FOMC, after FOMC. Okay, it's very unlikely we break through these levels beforehand. Okay, if we do, however, when we do break through, make sure the volume, okay, make sure the momentum is in supportiveness, or is supporting that breakout. Okay, you're not just buying a breakout with the prices crossed the line. You have to make sure the price is broken through resistance and is showing strength, relative strength, to continue upwards. So moving back to the high time frame charts, guys, the highest Bitcoin could realistically go before breaking into a bullish trend would be this downtrend diagonal resistance. Okay, that could theoretically right now take us to around 27.7. More realistically, in 3 days time, on the 21st, would take us to 27.4. So we break through this range, we can expect a move up to maybe retest this resistance. Before then, again, we do expect horizontal consolidation. If we come up and retest this resistance, we are still in a weekly bearish trend, guys. We're in a weekly bearish trend until we break through that downtrending level of resistance. Just as another example, we can see another example playing out perfectly over here, okay? We had a weekly bearish trend right over here. We broke through this resistance, okay, and we continued into a weekly bullish trend. We continued upwards. The same thing happening here. This relative 3-point diagonal resistance. If we break through this level, we will then flip the weekly trend, and the bullish narrative will continue. The price will continue upwards. Until then, we are in a weekly bearish trend. We have to treat resistance as resistance until it is not. The probabilities are in favor of rejection. If we lose this low of support, we continue into a macro bearish trend. I think I'm going to go ahead and wrap the video up there, guys, to finish and finalize everything. When in doubt, zoom out. Look at the higher time frame. Identify on a high time frame, if the short term breaks upwards, where could the price go? Identify if that breakout occurs and the price goes upwards, how would that impact the macro charts? Then zoom out again. Do exactly the same for the bearish case. If the price were to break down from the current horizontal range, what would that mean for the macro price action? Where would it go? Start to develop your high time frame narratives so that when these short-term triggers execute, you have this overall understanding of the probabilities and biases the market will have moving forward in the future. Then go down to a smaller time frame. Analyze a small time frame. First and foremost, identify the structure in which the price is moving in. The structure isn't just two random lines. The structure tells a lot about the habits or doings of buyers and sellers during a particular period of time. Remember, when we see a falling wedge structure, that's not just two lines compressing. That's not what it means. It means that over this particular period of time, we're having price action fall, but we're seeing that momentum is dropping, volume is dropping, volatility is dropping, and more importantly, bearish strength is dropping. That is resulting in the compression or the convergence of those trend lines, okay, which is in essence the compression of price action. Compression of price action in a downtrend signifies an increased probability that the bulls are starting to flip strength around and push the price upwards. So when you're looking at market structures and patterns, stop thinking of them as just shapes. Start thinking about the meaning behind what the price action is doing. Remember, everything is driven from buyers and sellers. You have to start shifting your thinking towards what the buyers and sellers are doing, what the meaning of this stuff is, rather than the stuff itself from a superficial level. A falling wedge is going to go up. Stop thinking it like that. Start thinking about the meaning behind these structures. The same goes for here, guys. The meaning behind the structures. Horizontal consolidation. When we approach resistance, we approach resistance. Why would we break up right now when we are seeing nothing on the charts that is signifying it? It doesn't make any sense. So therefore, the probabilities of rejections and continuations downs increase rather than decrease when we approach these levels of resistances. Thanks for watching, guys. I hope you have a great day, and I'll catch you guys in the next one tomorrow. We'll go over the macro charts in more detail tomorrow. See you then.